A massive 181-point Gift Nifty gap down paints a clear picture this morning. Get ready for what's ahead on Trade Vision pre-market report. Good morning, traders. Welcome to Trade Vision pre-market report. Today, 2026, July 24th, Friday, we're ready for another wonderfully vibrant and positive trading day. Let us deep dive into the detailed reports. The Trump administration has enacted new tariffs of 10 to 12.5% on imports from 60 nations, effective Friday, citing forced labor concerns. India faces a 10% levy, a move replacing expiring duties previously imposed by the US. This action could weigh on export-oriented Indian sectors like textiles and certain manufacturing, potentially dampening sentiment for companies with significant US market exposure and putting the spotlight on their global supply chain resilience. The United States has announced new 10% tariffs on goods imported from India, citing forced labor concerns as part of a broader re-evaluation of trade policy impacting 60 partner nations. This development could introduce fresh trade friction and elevate import costs for certain Indian exports, potentially weighing on market sentiment for export-oriented sectors and companies today, while highlighting evolving geopolitical trade dynamics. Capital market regulator SEBI is reportedly planning to replace the mandatory 20% upfront margin requirement for cash market trades with a lower risk-based requirement linked to clearing cooperation margins. This move could significantly ease fund requirements for investors in highly liquid stocks, lending support to trading volumes and overall market liquidity, particularly for large-cap and actively traded segments. The Reserve Bank of India reportedly intervened in the foreign exchange market to support the Indian rupee, which faced pressure from surging crude oil prices and global volatility. Despite these headwinds, the RBI's latest bulletin highlights India's sustained economic activity and improving foreign investment inflows, suggesting underlying resilience and potentially lending support to domestic market sentiment. Escalating Middle East tensions, marked by renewed US-Iran hostilities and Houthi attacks on Saudi oil tankers, have propelled Brent crude above $100 a barrel for the first time since May. This significant surge, coupled with increased risks to critical shipping lanes like the Strait of Hormuz and Bab el-Mandeb, could weigh heavily on India's import bill and inflationary outlook, putting the spotlight on energy-sensitive sectors and potentially pressuring the rupee. Russia has verbally restricted nighttime shipping at Novorossiysk, its largest cargo port, following recent Ukrainian drone attacks. This move, while not yet officially impacting green shipments, affects a major outlet for Russian oil, metals, and agricultural exports, and could tighten global commodity supplies. The potential for prolonged disruption may lend support to global food and metal prices, subtly influencing India's import costs for specific raw materials and keeping agricultural and metal stocks in focus. Major US technology firms Alphabet and Tesla reported earnings, with Alphabet surprising on revenue but both facing investor scrutiny over substantial capital expenditure forecasts that led to negative free cash flow. This amplified concerns about the profitability of aggressive AI buildouts, which could weigh on broader market sentiment and keep the spotlight on valuation multiples across the Indian IT and technology sectors today. South Korean heavy equipment manufacturer Doosan Bobcat announced a significant Q2 operating profit surprise, far exceeding market expectations, driven by strong North American and European performance. This robust showing in global industrial and construction equipment may lend support to sentiment for Indian capital goods and infrastructure-linked equities, leaving room for re-evaluation of sector fundamentals today.
You are watching Trade Vision! Smash that subscribe and enable the bell button right now! and share this video. Comment your love and share your happiness. Let's win together.
Foreign institutions sold nearly 3,000 crore rupees in Indian equities today. However, domestic institutions bought almost the same amount, providing strong support. This suggests a largely neutral market impact for the day. If we look at yesterday's sectoral data, we can clearly see money flowing out of Nifty Realty, which plummeted 1.81% yesterday and is down 3.48% for the week, and Nifty Private Banks down 0.77% yesterday and a hefty 4.30% for the week. Conversely, Nifty Auto up 0.70% yesterday and 1.58% for the week, and Nifty FMCG, despite a slight dip yesterday, show positive weekly momentum, indicating money rotating into these. Let us look at global events. The Reserve Bank of India's Monetary Policy Committee will announce its August policy decision on Wednesday, August 5th at 10 a.m. Indian Standard Time. This upcoming event will be crucial for Indian markets as the interest rate decision and forward guidance will directly impact banking and rate-sensitive sectors. The U.S. Federal Open Market Committee will meet on July 28th and 29th, with the rate decision expected on Wednesday, July 29th at 11:30 p.m. Indian Standard Time. This upcoming announcement will significantly influence global risk sentiment and foreign institutional investor flows into India. The U.S. Consumer Price Index for June, released on July 14th at 6 p.m. Indian Standard Time, showed inflation cooling more than expected. Headline CPI decreased 0.4% month-on-month, and the annual rate fell to 3.5%. The Eurozone Flash Composite Purchasing Managers Index for July, released today at 1:30 p.m. Indian Standard Time, came in at 50.3. This was a miss against the consensus forecast of 50.8. Later today, at 7:15 p.m. Indian Standard Time, the Flash US Composite Purchasing Managers Index for July is expected. The consensus forecast is for the index to ease to 51.9. Global markets closed mostly lower, with Asian and European indices seeing significant declines. Hong Kong and Shanghai offered some positive cues. US futures edged higher. Indian traders should anticipate a subdued opening, reflecting the negative global trend. Adani Power is in focus after announcing record Q1 FY27 earnings, with profit jumping 47% year-on-year, driven by strong electricity demand across India. Next, Iris Consulting acquired publicly listed fintech company Dion Global Solutions, marking its entry into the listed space. Eternal, formerly Zomato, saw its Q1 FY27 net profit jump 3.7 times to 92 crore rupees, with Blinkit emerging as the biggest revenue driver. Cipla shares are also on investors' radar following a weak Q1 FY27 performance, where net profit declined 39% year-on-year due to margin pressure. Lastly, Recode Studios completed the first phase of its. Let's check what the RAS levels are indicating for the Nifty today. The breakout level stands at 23,905, while the breakdown level to watch is 23,881. Should the market turn bullish, resistances are at R1, 23,994, R2, 24,083, and R3, 24,172. Conversely, if the market falls, supports are seen at S1, 23,792, S2, 23,703, and S3, 23,614. Today's CPR is defined by a top at 23,899, pivot at 23,889, and bottom at 23,879. Analyzing the options matrix and derivative distribution, we observe a significant bearish shift for the 2026 July 28 expiry, evidenced by the max pain anchoring at 24,000, a 100-point drop from the prior session's 24,100. The put-call ratio has deteriorated sharply from 0.754 to 0.653, indicating institutional short buildup. Major resistance stands firm at 25,000 max call OI, while demand at 23,000 max put OI attempts to absorb selling pressure. This positions the Nifty for a breakdown below 23,800 with a tactical range of 23,000 to 25,000. India VIX closed at 13.48, rising by a 1.43% compared to its previous close of 13.29. The 5-day trend is mixed. A rising VIX at higher market levels suggests increased volatility and potential caution for Nifty. The CPR is positioned at TC 23,899, Pivot 23,889, BC 23,879, expecting normal movements in the market today. Gift Nifty opened at 23,681, marking a gap down of 182 points relative to Nifty's previous close of 23,863. This suggests a likely bearish open for Nifty 50, but confirmation is needed. The no-trade zone for Nifty is 23,881 to 23,905, where sideways movement is expected. A breakout above 23,905 could target an upside of 131 points, reaching 24,036. Conversely, a breakdown below 23,881 could see a downside of 178 points, reaching 23,703. Previous trading day, Nifty moved minus 35 points, indicating a bearish sentiment. The weekly move is minus 320 points, and the monthly move is minus 28 points. The close did not sit tight against either extreme, so there is no strong directional carryover signal into today. And now, the moment you've been waiting for. Today's final market verdict. Indian markets are poised for a challenging day, with the Nifty and Sensex closing yesterday below their breakdown levels. The Nifty fell by 0.53% and the Sensex by 0.47%. We also saw a significant gap down in the Gift Nifty of 181.5 points, indicating a weak start. While Nifty futures show a long build-up with a 16.4-point premium, this is contradicted by a bearish option setup, with the put-call ratio at 0.653 and heavy call writing at the 24,000 strike. Foreign institutions were sellers, with an outflow of nearly 3,000 crore rupees, although domestic institutions bought almost 2,950 crore rupees, offering some support. Global markets are largely negative, and the India VIX has risen by 1.43%, signaling increased fear. Weighing these signals together, the Indian market is set for a bearish trend today. The strong bearish options data and negative global cues outweigh the futures build-up, suggesting downward pressure. Any attempted recovery will likely face stiff resistance, keeping the market under considerable strain. And that wraps up today's Trade Vision pre-market report. Don't miss a beat. Please subscribe to our channel and hit that notification bell for daily updates. If you found today's insights useful, a quick like and share would mean the world to us. We'd also love to hear your thoughts and advice in the comments below. Have a truly magnificent and profitable trading day.